We're talking top sector technical ETFs with John Murphy. And John, I guess with all the ETFs out there and all the sectors, as far as for technical traders, where do they look? What do they look at? What do you like these days?
Well, basically there are 10 sectors in the stock market. I pay a lot of attention to sector rotations, and that has a lot to do with what the stock market is doing, the interplay between bonds and stocks. For example, during 2011, one of the clues that we received, that I got in the spring of 2011, that the stock market was starting to correct, that we noticed on relative strength basis, money started flowing into defensive stocks, consumer staples, healthcare, utilities. Normally when they assume market leadership, it's usually a sign that the market is entering some kind of a correction.
Right, the risk-off.
It's a risk-off trade, exactly. Right. Utilities were the top-performing sector last year. Utilities are the worst-performing sector this year. Right. So now when things are starting to look a little bit more optimistic, one of the things that we start to see is that those defensive groups lag. We start to see money flowing into industrial stocks, technology stocks, consumer discretionary stocks, stocks tied to commodities. When they're showing leadership, that's usually a good sign for the market. But it also, beneath the surface, if you're positive on the market, it also tells you what sectors you should be investing in. Like right now, for example, toward the end of February, energy stocks over the last week or two have assumed a market leadership role. And I think that's tied to the fact that the price of oil is going up. We have the situation in Iran. We all know what's going on there. It's also a sign of global economic strength. Oil prices are breaking out. Normally when that happens, that means it's a good time to buy into oil stocks. You can either the XLE, which is the energy spider, or oil service holders, OIH. So they're all going up, and it means that energy stocks are beginning to assume market leadership.
And as from a trading position, there's still weakness, even though fundamentally it looks like the story for natural gas, for example, is a long-term story, but it's not a trading story at this point.
Yeah, natural gas is a whole different story. I'm talking mainly about crude oil, gasoline, and heating oil. They've been really surging over the last couple of months. Nat gas has been in a world of its own. It's only begun to stabilize a little bit, but nat gas is really in a world of its own. It's been in the downtrend for like 2 years now, with no real convincing sign of a bottom. But the XLE or the OIH is a good way to get participation in the broad energy sector.
Right. Great advice. Thank you.
You're welcome.
And thank you for watching the MoneyShow.com video network.